One of the things that investors get taught is they get taught to read what's going on and not see what's going on, right? This is why people get concerned when they hear the inflation numbers are too high, or deficit spending is too high, or the debt ceiling isn't going to be raised or is going to be raised, and valuations are at X year high or not since 1929, blah, 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 blah. And all these words hit them and they get anxious and worried and concerned. It has nothing to do with their intelligence, and it has nothing to do with how long they've been investing. So what I want to do today is I want to show in this weekly update what's moving higher, what's not moving higher, and what it means to have these specific things move higher, because here's the punchline. The market is getting stronger. Now, what market are we talking about? So we'll talk about which specific stock market is getting stronger, what is not working, what crypto is working, and I'm going to throw one more thing in there. There's a stock that almost every person over the age of 60 has been told to buy, and it is absolutely hurting their life, their retirement, their choices. They just don't know it. So we're going to talk about that today too. So let me jump over to the charts and we'll get this going. Okay, so let's get over to the charts. So guys, my name is RC Peck and I work for Fearless Wealth, and this is the weekly update for Fearless Wealth. And the thing I want to start with you is what's called a relative price chart. So if the black line on this screen is going higher, okay, that means the market is getting more and more stable. Now, I want to point something out to you, and I can zoom out too. Look over to the left of the screen. You kind of see that peak in May, June. I'm looking here. Notice that a lot of this consolidation on the right side of the screen over here is happening above that. And this market, now this is a relative price chart, but let's call it a market, is moving up and to the right. So let me tell you what we're actually looking at here. This is consumer discretionary, also known as the part of the market that no one buys when they're worried, divided by consumer staples, also known as the thing people buy when they do get worried. So with this relative price chart, if it's moving higher, that means more money is moving into the parts of the market where people move their money when they're worried less about the market or when they have a more bullish stance on the market. And so this is breaking up and out, and you can actually see it went sideways for a while and finally is breaking up and out in a more consistent way. Now, these two symbols are small cap. So this is the small cap consumer discretionary divided by the small cap equal weighted. Officially, they're both equal weighted. I just misspoke. They're both equal weighted, but in a way, they're kind of small cappy too, because there's equal dollar amounts in all of these symbols. So that's the first thing I want to show you that is going up and to the right. If I show you the large cap version, this is the big stocks, and the same thing's happening. This is a relative price chart, and consumer discretionary is moving higher relative to consumer staple. And you can see the exact same thing, that the market is getting more and more stable. Another note is, guys, value just broke out to a new lifetime high. Now, value was going sideways for the most part from May, and let's just call it until maybe a few days ago. And now value is moving higher. This is good because value has underperformed the market for about a decade. And so this is kind of bringing back its leadership stance that it lost during this 5 months that it was going sideways. So value is moving higher. What's not moving higher right now is international. International right now is a double top. I think it's going to move higher, but it's having a lot harder time moving higher. And Europe is having a harder time moving higher too. And we rounded up with emerging markets, which it looks horrible. This is emerging markets without China, and it looks a little bit better. But the story of the last 11 or 12 years continues. The US stock market is still the strongest place to be. So that is good news for people who want the stock market to go higher. Okay, so that was the first kind of thing I wanted to show you what I was noticing. Big news this week in the crypto world There is Bitcoin has its own ETF now. It's kind of a crappy ETF. It's an ETF that's based on future contracts. And what that means is the underlying investment is going to have to roll over to the next futures contract. And that rolling over, especially with a futures contract or futures like Bitcoin, where you're going to have to be rolling over into higher priced future contracts. So it's not actually the best form for an ETF for crypto, but it is the first crypto ETF. So that is a big deal. GBTC, which is an ETN, is really Grayscale, the company behind GBTC, is working their butts off to let the SEC allow GBTC to become or to go from a trust to an ETF. But really what we have here, and I've talked about this the last 2 or 3 weeks, maybe more, is how crypto is bigger than China. And you can see this is Bitcoin. Okay, that's at a new lifetime high. September 24th, let's just put where my blue lines are right there. That's when China outlawed and made it illegal to own all crypto. And guess what crypto did to China? Crypto gave China the middle finger and said, yeah, we don't actually need you. It's your loss. And I agree that I think it is China's loss. But crypto is bigger than China. That's a pretty big deal. There's been a lot of talk about whether China and Taiwan are going to go to war. And if you want to know if they're really going to go to a hot war, it would probably be to watch the Taiwanese stock market, because that's gonna show you if something bad is going on in that world. It's gonna have to start falling. You can see it looking like very similar. It's actually one of the stronger emerging markets. That's what it falls into, even though it's emerged decades ago. If you start seeing this symbol fall relative to everything else and in absolute terms, that may be a sign that Taiwan and China are going to get into something not so good. So that's something you could do to watch that, to know if they're really going to get into a war, rather than just reading more articles on they're going to get into a war. Okay, so we talked about crypto. I talked about how the market is moving higher out of strength. One thing that is not moving higher is the bond market. So this is the US bond market, just kind of lost in the woods, and has been lost in the woods since March of last year. That's a long time ago. So bonds are not looking good. This is international bonds right here, which look a little bit worse because they're basically at the same price as they were from September of 2019. So bonds, you know what? Bonds are just not looking good. And sadly, it's going to hurt a lot of people because rates are so low. And when rates go up, bond prices go down. Okay, so I want to talk to you about that stock that most people own and they don't realize how much it's hurting them. So the stock I want to talk about is AT&T. Now, first of all, actually, let me put something up on the screen here. First of all, it doesn't necessarily have to be AT&T. But AT&T, first off, if you look at the screen, you can tell they have no idea what their business model is. It's going sideways. It looks like a patient that might live, might die. I don't know. It's a big company. It's a $185 billion market cap, but it's just looking horrible. And I'm sure, and this is why I brought it up, absolutely, we have people buying AT&T because it has it's yielding 8%. And that's a really big yield. But it is dangerous to buy a yield without understanding the price connected to it. And an 8% yield obviously is big, but if you look at this, let's just see, let's do this. Let's just look at what this has done this year, right? So you've collected, let's say 3/4 of your yield. So let's call it 6% already this year. And your stock is up 3%. So you're up about 10%. And I know you're thinking, hey, that might be awesome. But if you consider that, you could have just bought the S&P 500. The S&P 500 during the exact same time period is up 33%. So that kind of tells you how much people who are owning this is hurting. Now, I also want to point out that's just one data point. That's just this year. I started this conversation off by showing a 3.5-year price chart. So if you wanted to look at this from when the market peaked or pre-COVID, the pre-COVID peak, AT&T is down from its pre-COVID peak. It's down 25%. During the same time period, the S&P is up 35%. So that's also known as a 60 percentage point difference. This is the biggest fee you will pay as an investor, is not understanding how to read price charts and how to own things that are actually making your portfolio weaker. So AT&T is down 25% since the market peak, which was in February of 2020. And the S&P itself is up 35% since then. So this is happening all over the place, and it really just hurts people because they buy it for the 8% yield, and they don't realize that, this stock can go down, this stock can go up, but it's a high volatile priced stock that can absolutely pull away way more than you're getting, right? So up here, not only was it not yielding 8%, but it fell 25%. So you want to stay away from the story, which is just buy yield, just buy yield, just buy yield. And you want to really start to understand what you're also owning is price. Even with bonds, you own the price of the bond and the yield. So it's something to note. Not all communication stocks or telco stocks are like that. Verizon, which looks slightly better, but kind of still crappy, is a 4.7% yield, but looks slightly better than it over the last 3.5 years. So really understanding this yield thing is super important, but you have to understand yield and be able to read a price chart. Super important stuff. So, okay, let's wrap this up. So what do we have? The market is in the hands of the strong. The market is getting stronger. The US market is still stronger than Europe, still stronger than international, still stronger than emerging markets, still stronger than emerging market ex-China. US is still the leader. Could go on for a while, could go on for the next 10 years, but the US is still the place to be. Value is finally broken out to a new lifetime high. That's a really good sign for stability in the market because that's more rotation or rotating back to what was leading. And I think maybe the big news is crypto is getting more and more stable. It's getting bigger in size. The crypto universe now is about $2.5 trillion. Easily be a $10 or $20 trillion size market in 5 to 10 years. So that's a 10x from here. Obviously, how you own crypto is important. Thanks, guys, for being in my world. Let me know where I got it right, where I got it wrong. Hit the thumbs up, the like button, leave a comment, all those good things that YouTube likes to hear. Thanks for being in my world. And let me know if there's something you want me to cover. But really the net is read all the stuff you want, but you gotta understand and you have to know how to read a price chart to bring that stability, that clarity, that control back into your life. Thanks, guys, and I will see you on the next video. And if you like this video, of course, you'll love my other videos. Just check them out. You can see them on the channel. Okay, I'll speak to you soon. Bye.